Hello traders, today is the 4th of April. My name is Neville Hall, market analyst for YouTrading, and today I'm looking at the key events in the week ahead. Now, if we just take a quick look at the week on the major sort of tier 1, tier 2 data points and bank holidays, we can see that China is currently on bank holiday today and tomorrow, and then there's not a lot else going on this week. The market focus will be the Australian RBA rate statement on Tuesday, so tomorrow, after their cash rate decision, and then the FOMC meeting minutes from their previous meeting. Traders will be poring over that, trying to work out whether or not they are more hawkish and are going to go for multiple 50 basis points rate hikes and a sort of a rapid reduction of their balance sheet. So that's kind of the two focus points. Obviously, we've got Canadian unemployment on Friday. Crude oil inventories will also be crucial for oil. ISM services PMI looking for an expansion still. So, traders will be looking at that. But generally, it's going to be a really quiet week. We're going to be waiting for those two central bank sort of statements, and then oil inventories mainly. And in between time, it'll be everything about the Russia-Ukraine sort of situation, which is getting quite messy now. Last week on Friday, we obviously had US non-farm payrolls, came in 431,000, which is pretty good. However, the market was very positive about the 750,000, which was an uptick in the previous month's sort of readings. So March, 431,000, still good. Obviously, the market's probably expected to see a little bit more added onto that. We are seeing that GDP growth rate currently at 6.9%, so that's good. Looking down here, interest rates at 0.5, with dual mandate for the Fed being full employment and price stability. They need to get this inflation rate down, so they're probably going to move a lot quicker. So 50 basis point hikes over the next couple of meetings, and that's kind of what traders will be looking at in this FOMC statement on Wednesday to sort of see whether or not there's any hints of if that's the way they're going to go, like more hawkish, quicker. Looking at active trader, I still believe that we're in an impulsive move to the upside for the dollar. And based on what happened on Friday, we can see that we ended it sort of halfway in the day. We did find some resistance on the lows, the 27th of March. However, today started positive in the sort of Globex European session. So I'm expecting to see the dollar carry on going up in this sort of bull flag, pop out at the top, and then carry on up towards 100, maybe $101. Looking at the Australian dollar versus US dollar, obviously the RBA comes first. If we were just to sort of scoot out a bit, all the way back to 2020, big impulsive move to the downside on the back of pandemic, lockdowns and things like that. Then we had some decent impulsive waves to the upside. We've had this really long correction from the highs of 25th of February 2021 all the way down to pretty much the lows of February a year later. We're now starting to make, if I just go to a line chart for the closing prices, you can see that we're making higher highs, higher lows on the swing highs. And essentially, we're taking out liquidity above the swing high here from 27th of October, 2021, and probably all going to go all the way up 0.8 up here, maybe a little bit further. So currently waiting for this, maybe a pullback into the 200 period moving average, and then another boost to the upside. Otherwise, it's just going to be momentum pushing the price action higher. If we look at the sentiment indicator on active trader, 68% of traders are trying to short this. So as that number grows, as this sort of short position gets bigger, then I'm expecting the Aussie to go a lot higher quicker. Obviously, if they start to sort of even out, come back towards being more neutral, then that's when I think we get this pullback into the moving averages. I currently wouldn't be looking to go long. I'll wait until after the RBA, see what happens then. I'm expecting to see some sort of US dollar push on FOMC, and then that Aussie come down a little bit before shooting off up to the upside. Expectations are that the RBA keep their rate hike decision neutral, so they're not going to change their monetary policy, and that's going to be good for the New Zealand dollar versus US dollar. So if I just go down to that, I've actually got a long open at the moment. It's slightly underwater, but as you can see, if that Aussie carries on going, it's going to drag the New Zealand dollar versus US dollar higher, and I reckon the New Zealand dollar will probably accelerate quicker because the sort of RBA and the RBNZ are kind of different in their policy stance at the moment. RBNZ are looking to be more hawkish and tighter monetary policy, which should support the New Zealand dollar. So I'm hoping that happens. Stop loss, obviously, 0.687, just in case I'm completely wrong. All right, going up to the euro versus US dollar. Obviously, the euro is weakening on any bad news, and any sort of news that doesn't include peace talks and a ceasefire is going to weigh heavily on the euro versus US dollar. And obviously we're in this like downtrend, so I am expecting a break to the upside at some point out of this channel. You know, maybe when the 200 period moving average gets down towards the 1.13, that's, you know, maybe when price action goes up to test it, because like I said before, the 1.13 has been the most traded level since end of December 2021. Or we get an acceleration to the downside, take out some liquidity below this swing low from March 2020 on increasing dollar strength. Going to the dollar CAD, obviously being pushed around by the dollar and energy prices. Last week, President Biden said he was going to sort of enforce 1 million barrels per day release from the SPR for 6 months. That's obviously weakened the energy markets at the moment, while traders try and work out whether or not there's oversupply, demand destruction because of war and lockdowns in China. You know, just trying to work out where we stand with supply and demand. But last week, Brent and WTI came down, so CAD came down. Dollar versus the CAD tried to make a bit of a rally. If we go to the candles, you can see every time it sort of rallied, it got rejected. So dollar CAD at the moment going sideways, took out some liquidity from January 2022. Possibly if the dollar comes down, if oil goes up higher, then we could come down and test 21st of October, 20th of October 2021, or we, one more time go up to the 1.26 into the sort of moving averages, which are kind of all twisting together now. That's where dynamic resistance is going to be. Obviously, liquidity is above the 1.29 up to the 1.3. So based on a weakening energy prices and strengthening dollar, that's how dollar CAD goes higher. But until we actually see that in something like Brent, I'll just open up Brent. If we get a collapse down in Brent, take out the low from March 2022 down towards 200 period moving average, then dollar CAD, probably goes higher at that point. Otherwise, if this Brent sort of rising trend line, dynamic support from the 20 and 50 EMAs holds, then dollar CAD goes lower. Looking at the pound versus US dollar, kind of trying to make a reversal. We had big move down, then a slight bounce up on the 10th of March, then another push down, then a close above that swing high. So that's a signal that we're trying to at least change the direction of the pound versus US dollar. It just, we now need to see another higher high. At the moment, we've got a low, a high, a higher low. We need to see another higher high. Dollar versus the yen is, so this is dollar versus the yen. Big up trend, big impulsive move to the upside, bit of a correction down towards these balance areas here. Looks like if we take out Friday's high, we're going to start going back up towards 125, 127 maybe. If we can't take out Friday's high and we take out Thursday's low, then I'll be looking for support at this red candle around the 119 and the 50 period moving average. And then we might even get a retest of this February high breakout. Another safe haven is obviously gold, just going sideways. So not a lot we can do there, waiting for some sort of direction. This is the DAX, obviously quite a volatile index. It did push up into the sort of old support line of just under 15,000, rejected that, came back down to this balance area, and is now, we're just waiting to see whether or not the buyers can maintain their pressure and get back above the 200 period moving average, or whether they're going to give up, take some profits here, and then wait for another pullback lower. Dow Jones Industrial Average suggests that indices will probably go higher. Obviously, we came back down, nice sort of swift retracement back into this balance area, found support. The 20, the 50, 200 are all sort of entwined together, acting as dynamic support. This balance area is going to act as support. We've got some decent sort of swing highs to target for liquidity. So if we can get back above 35 1,500, then I think US indices will probably pull global indices higher. The FTSE 100, again, bullish, 20, 50, 200 period moving average, all on top of each other. We're finding that we get an impulsive move, then a sort of sideways pop higher, as long as we keep making higher highs and higher lows. So these green triangles get higher, and any red triangle also gets higher up in price. Then, yeah, I think we take out some recent all-time highs. And obviously the benchmark is the S&P 500. There is a case that we found some sort of resistance. We found it at the lows of January 17th here, 4,650, obviously acting as a resistance. We had this internal trend line acting as resistance. We came back down, found some support at this balance area. As long as we take out some swing highs, obviously we go to new all-time highs, but obviously this first line of resistance is going to be the low from the 29th of March. So I'm waiting to see what happens there. I think we're going to test it today, maybe even tomorrow, ahead of FOMC on Wednesday. And then depending on what traders do on Wednesday, I think depends if we get above this swing high or if we attack the 200 period moving average. Okay, that's what I'm seeing at the moment in the markets. A bit of a quiet week, only a couple of things to sort of keep an eye on in terms of the calendar. If we look at the YouTrading.com Forex heat map, we can see that the bottom left-hand corner on the London session today is green, top right-hand corner is red. So it's more of a risk-on day. Thinking like the FTSE, the DAX, up until the US session, lead the indices higher. Looking to see if we can move into oil, off that sort of support trend line, and then yeah, see how we go. But yeah, it's gonna be a quiet week. So keep your wits about you. Wait for a decent pullback, and then yeah, take a trade with decent risk reward. All right, good luck, and I'll speak to you again tomorrow.